You want to become a professional trader, but you have a full-time job, and you're not sure what steps to take to start your journey to full-time professional trader. Well, one afternoon, while I was more managing some trades, I noticed on Twitter a developing trader share a playbook trade of a recent winning trade. This playbook trade modeled my template for reviewing your best trades and growing your trading business that I wrote about in my second book, The Playbook. It was very well done for a developing trader. One, as it turned out, who also had a full-time job, but was trading part-time with the hope to become a professional trader. And so I invited him to share his playbook trade while I mentored him, which you're gonna get a chance to see in this video. Watch this developing trader with a full-time job provide excellent role modeling for the trading community on how to improve as a trader. Hi, I'm Mike Bellafiore, managing partner of SME Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and The Playbook. Go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. Well, in this video, you're gonna see a developing trader with a full-time job role modeling how to improve so he can become a professional trader. You're also gonna learn the correct entries for swing trades, examples of reasons to exit your winning positions, whether to use 2-minute or 5-minute charts on the open. One reason to exit even if your stop loss has not been hit. The minimum average daily volume in stocks best for trading. And as always, the biggest reward for our videos for you is how to think through a trade like a pro. For those who want to see winning trades to add to your trading business, check out this video. If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up the free registration page in a new window. Don't worry, you're not going to lose this video. You can also visit tradingworkshop.com to register for this free, intensive, awesome workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
This was a trade using the SMB AM morning meeting. MGI was in play this day. That was due to MoneyGram got $30 million from a cryptocurrency company called Ripple. Since I have followed the crypto space since 2017, I know a little bit about Ripple. In my personal opinion, I kind of think they're trying to be Bitcoin. I didn't really think that this was going to really make MoneyGram that much more profitable. I thought MoneyGram was up way too high on this news, and so that's what I was doing, was trying to look for an entry to short it. Yeah, so kind of for the trade strategy, after I did this trade, this is kind of what I came up with. So it had a huge run. I mean, it was over 100% in the after hours. I did see lower highs being put in right before the open in the pre-market. There was a lower high put in right on the initial spike, and it flushed right after that. I expect big moves with these kinds of things. It seemed like my thesis was correct. So managed the intraday levels. I was mostly looking at the 5-minute chart to try to find my entries of consolidation. And so that's the trade strategy. All right, so big picture, SPY was ranging in between 288 and 290 for about 5 sessions. They had a breakout of 290 in the PM. This was due to them thinking the Fed news was going to be good. The Fed didn't actually release the news on this day, but the market was anticipating it was going to be good news. There was also the catalyst that Trump was going to meet with China's prime minister during the G2 summit, I believe it is, to talk about the trade war that was going on.
So just something to think about. This is the big picture for the overall market. For MGI, would there be a more big picture for you to consider? For instance, what's the state of the low float market? What's the state of cryptocurrencies?
Yeah, definitely. Crypto has been on the rise, especially Bitcoin, in the last, I think, 2 or 3 months. Big picture on that. It's gone, I think the low this year was in the 4,000s, maybe the high 3,000s. And I think it's pushing 9K, almost 10K today. So the overall big picture for the crypto industry has been very bullish, in my opinion. So because Ripple did invest $30 million into this into MoneyGram, who does a lot of international money transfers, seemed bullish to me. I just didn't think it was a more than 100% move in a pre-market bullish.
Okay. I guess my point there is feel free to use your judgment when you're thinking about the big picture to suit it more towards a sector or a category of stocks that are most similar and certainly most similar due to the time period we're in.
All right, intraday fundamentals. Again, Ripple crypto invested $3 million into MoneyGram. It was a stock that was in play during the SMB AM meeting. It gapped up over 100% after hours. The average daily volume for MoneyGram is only 336,000 shares a day. It only moves 32 cents for its ATR. Its RVOL was very high, 84.09, with a short float of 10.37%.
What did you think about the average daily volume there?
I've been looking at more stocks that do a lot more volume than that. So kind of in my inexperience, I thought this was kind of a stock that doesn't do that much volume compared to what I usually trade. So when I saw an RVOL being that high on it, obviously I definitely knew it was in play. Also because it was part of the AM meeting, I knew it was in play.
Good. When your average daily volume is less than you normally feel comfortable with, so we'll say 800,000 shares a day on average is a cutoff line. Generally, for us, that's a good placeholder for doesn't do enough volume, does enough volume. Below 800,000, most of the times that's a stock that doesn't do enough volume for us to want to trade. Above 800,000 shares, that is enough volume on average. But then, so if you have that and you've got a stock that does under that 800,000 shares a day in volume, you want to say, well, I'll trade it, but only if it's really in play. Only if the news catalyst is super significant. So in this case, when you have an RVOL of 84, that certainly is an example of a stock that is very much in play, confirmed by that elevated RVOL. So, I would watch this start to trade in the pre-market and see if it was super spready, see if there was real volume in it, and make a judgment call based on what I was seeing on the tape, and make a judgment call based on the RVOL, and make a judgment call based on the significance of the news catalyst as to whether or not I would trade it. And to me, this would be an acceptable exception to our general rule, less than 800,000 shares of volume, we're not going to touch it.
All right, so long-term technical analysis on MoneyGram. So this is kind of just a chart of the, let's see. Yeah, this was the chart. There wasn't much on the long term because it was trading in a range in the $1.40 to $1.60 range, I believe, for a really long time. So I just decided to use this chart as what it did in the after hours and pre-market before the trades actually took place. So as you can see, I mean, it went from, what was it, 143 all the way up to almost $4 in the after hours due to this news. In the pre-market, you can see that it is making lower highs as it's getting closer towards the open, and that's what I was really looking at. And also right before, and we'll get into this in the next chart, but right before the open, there was kind of a level set. I think it was like 350-ish that it was holding. But if it would have broken, then I was definitely confirmed my thesis that it was probably going to trade to the short side. Yeah. Okay. So how was it trading intraday? So I was looking at these levels again. It was making lower highs right on the open. It pushed up. It made a lower high, and then it came back down. There were buyers in the pre-market hanging out about 352, and then it flushed. I actually missed. And we'll get into the trade management portion of this, but I missed the buy to get a tier 1 at 352 or below 352. I think I was actually maybe looking at another stock at this time, but once I came back to this one, I saw that it went back up to that level and then failed, and that's when I got into my first position.
So I have a question. So when you saw the stock gap up so much in the pre-market, were you tempted to just short it? Did you just short it?
I wasn't tempted to short it. I wanted to wait for some kind of confirmation that it wasn't going to continue after the real market got involved.
So you wanted to wait for it to open?
Yes, I did. Yes.
And then you wanted to wait for confirmation after it opened?
Yes, sir.
But come on, you had to have been tempted at, when it's 4 to just short the stock.
Yeah, I mean, there was definitely temptation to do that. I've been really trying my hardest. So personally, I deal with extreme FOMO. It's something that I'm working on as a trader. And I was really trying not to FOMO into this. Just because I had a thesis doesn't mean it was going to be correct. So just kind of a part of my personal growth in trading, I really tried to restrain myself from making any trades on this one just based on what I thought.
Well, I would agree with that, but I welcome you to disagree with anything that I say as long as there's good reasoning behind it. So I am sure that I'm sure that there's temptation to just short it when something's up too much. We do find, and I said this yesterday, we do find that elite active traders do best when they have a thesis and they combine it with a setup and they combine it with price action and they combine it with a good entry. So it looks like you're looking to follow that template on this particular opportunity.
Yes, sir. Yeah, that's what I've been trying to do. Looking through my trader view trades and some of the really bad trades that I've made in the last 2 months, the one thing that just sticks out is just I was making the trade because it was just pure FOMO. And if I'm going to actually, try to do this professionally one day, I got to fix that. So I'm trying to pay very close attention to that. Yeah. So after the 352 break, it retested that level and failed, and continued to go down. Hit 316 and consolidated between 316 and 330. After a consolidation period of about an hour, it broke 316 and went down to 295, consolidated again and kind of broke down just a little bit slower and kind of stair-stepped from there. I did see a double bottom at 291, and that's where I put my buy to cover. I can only trade. I do work a full-time job, so I only really get the opportunity to trade on most days for maybe an hour and a half or a couple of hours in the morning. And so the 291 level is where I put my stop and went to work and didn't look at it again until I got off of work. Reading the tape, this was, I understand this is really important. This is another area that I'm trying to work on. I'm very new to looking at the level 2. To be completely honest, another lesson that came out of this, I don't remember if I put it in, is that I am way too focused on the bars in the chart. I need to work on looking at volume. I need to look at looking at the level 2. So that is another lesson that has come out of this trade that I've been trying to incorporate in the last couple of days. But yeah, I wasn't really looking at the tape while I was trading this. I was really just trading it based on the levels of the 5-minute chart.
So you're looking at 5-minute charts for this?
Yes, I was looking at the 5-minute chart, I believe. And my lower time frame, I switched over to 2-minute charts. I've been trying that out because in the DNA program, it said that might be good for people to use.
And what time of the day you're trading this right on the open?
Yes.
Did you used to use 2-minute charts and discovered 5-minute
No,
charts?
I used to use the 5-minute chart and the 1-minute chart.
Okay. And you didn't have success with the 1-minute chart?
I was seeing success, but what I was beginning to find out is I was being too trigger happy on the 1-minute chart. So I'm trying the 2-minute chart to see if I have a little bit better results with that.
Yeah, can I make a suggestion on the open?
Absolutely.
I would highly recommend that you experiment with your 2-minute charts. And why do you think that I'm saying that?
Because the price action is just so crazy.
Anyone else?
It's hard to pick a pattern within like 1 minute.
I was suggesting that he use 2 minutes as opposed to 5 minutes on the open session. So the 1-minute charts were causing him to overtrade, and then he switched to the 5-minute, and I was suggesting 2 minutes is worth exploring. Yeah.
I mean, it could be a whole move within that 5-minute candle that you catch in the 2-minute, but not the 5-minute.
There are more data points in a 2-minute chart, and even though you may be more trigger happy with a 2 or 1 minute chart, you're purposefully hiding information with only using a 5-minute chart in the first 5 to 10 minutes.
Yeah.
It's probably going to be even more necessary if you're having trouble reading the tape, your level 2 skills are poor.
Okay. So I say what you said again, but louder.
You can miss an entire move, like a whole move can happen within a 5-minute candle that you can catch with the 2-minute, but you won't be able to catch with the 5-minute.
Yeah, I mean the first hour of trading, that open of trading between 9:30 and 10:15-ish, and that time varies depending on the stock. There's not an exact time that we sort of demark the opening of trading. Sometimes it's an hour, sometimes it's 30 minutes, sometimes it's 45 minutes. It's usually 45 minutes. That is what kind of a period of trading?
Price discovery.
Yeah, it's a price discovery period of trading. Yes, things can trend starting from the open all the way into the close, but we tend to attack that first 45 minutes with a momentum-based strategy because of price discovery. Things can overshoot to the downside and then come right back up. Things can overshoot to the upside and then come right back down. There's a bit of confusion, there's a bit of craziness, there's discovery. And so I'm concerned about you missing the start of momentum, and I'm concerned about you capturing the wrong type of move and getting in at bad prices by using those 5-minute charts. If they work for you, great. But generally, using shorter time frame charts on the open in that first 45 minutes and employing more of a momentum strategy works. And even if you're applying a swing trend type of strategy, I am concerned in that swing and trend type of strategy that you're going to just miss too much. There's too much information that you need. You're going to miss really good shorts in this case by not capturing the beginnings of moves. So play around with that, see if that helps.
No, that's great. Thanks, Bella. So here is my trade management. Sorry if I'm a little. I kind of reviewed this. This happened 2 or 3 days ago. So, so the trades management for number one, I shorted tier one at 340. This is when but I got stopped out actually on my first trade. I saw it go down. It set some levels. I set my stop. Ended up getting stopped out at 347. However, right after that, I saw that it did tap that 352 level again, and fell from that. So I immediately got back in tier one at 347 with a stop right above the 352 level. It traded in my favor, which was great. I'm really new to shorts, so this was really exciting for me. And again, I was trying to keep my excitement down in a controlled manner, but this was really cool for me, being new with shorts, that this was actually working in my favor. Number three, I added tier two at 332 with a stop.
All right, let's start with tier one.
Yeah.
So you shorted tier one at 340. So when I look at that, the short is right below. Can you highlight that? Can somebody highlight that? Short is right below there. And the cover is right where you shorted. So, from a momentum-based strategy, that's where you would cover. Where you're shorting is where I would cover. From a momentum-based strategy, I would be shorting below that. Can you highlight that again?
Yeah.
Below right there. Is that 347? So you want to be shorting there. And giving it a run. And then, all right, so does that make sense?
Yeah, so just a little history, just for me personally. I definitely know there's guys in the room that are in the internship and doing. I'm trying to focus, me personally, I'm trying to focus more on slower trades than momentum. I definitely agree this could be a momentum trade. Personally, I have found out right now that I don't do well with momentum trades. So I'm trying to get rid of any kind of inkling to do so. That's just me personally. And also during the DNA course, momentum trades haven't been covered yet. At least it's how far I am into it. And so I've been really trying to focus more kind of on the slower trades. But I definitely agree. I did really miss that first move when it broke that pre-market level right there at 352.
Yeah, so let's do it from the swing. That's fine, and that's great. And everybody trades a different niche and ought to trade what they're most comfortable with. So let's do it from the slower swing trading side. So from that side, your entry price is not very good, and you need more time to enter at that price. You need for it to hang out at that price for a longer period of time, based on how it's actually acted. If you're going to swing it, the entry is on the open against the highs, this 355-ish area. You want to sort of be the person shorting into that up move using the high, that 365. Is that 365? Whatever the high of that wick is, you want to be the person shorting into that wick for a swing. That's a legitimate swing trade. Okay? And then yes, when it comes back to that 347, for your second attempt, that's a legitimate swing as well up here at 347 that time, because that's the price where it broke down from previously. And your stop would be, above. You could give it all the way above the high as well there. All right, go ahead.
Okay. So I added tier two at 332 with a stop. And so this is a tick chart right here. I wasn't trading the tick chart when I was actually physically trading. It was just easier for me to actually do the trade management where I had some more space to actually type into it. But you see that the local high was at 342. So I'm looking at number 3 where I added tier 2. If you see the little arrow to the left, that's where it was. Yeah, right there. So I added tier 2 right there with a stop right above that local high. And then I added tier 3 right below the break of the support level of 319, which was a support level from the pre-market, S1 in my opinion. It didn't follow through, so I ended up hitting my stop at 10 cents higher just on that one tier. I added tier 3 again at 319 with a stop at 327.
So just something for you to think about as well. So when something gets below a support level, there's a couple of different ways to start to short that as a swing trader. So you can, when something makes a new low, you can use that as ammunition and evidence that you want to short more. Your decision is, well, where do you want to short more? And lots of guys on the desk who swing trade here, what they'll do is they'll short the next pop. So if something makes a new low or breaks below a significant support level, and they know that lots of people are trading this on a day like today, right? A lot of day traders are trading this. It's a crowded stock. When something's crowded, it often snaps back. And so that new low gives them the evidence that they want to short more, but then they just sort of wait for that next pop. And a lot of times you'll hear guys say, if it gets below a certain level, then I'm going to start to short all of the pops. Joseph says that. I hear him saying that. If it gets below a certain level, I'm going to put on more risk into the pops because it's just so crowded. And if you're the one, a lot of the weak hand shorts, a lot of the lesser short-term traders are going to be hitting that and then getting squeezed a little bit into a pop. You want to be the person who is accepting the people that are getting squeezed, the lesser traders who are getting squeezed. You want to be accepting their covers. You want to be catching those covers. And so that's something to work into your strategy as well.
All right, yeah. So and this is a great example too of something else, and I alluded it to before. It's just over trading, over trading every little move instead of being patient and waiting. You can definitely see that. I definitely see that, and it's something I am definitely trying to work on. So continuing, I added tier 3 again at 319, got stopped out at 327. That's after it broke that local high right before it. And then
you're just getting the pattern wrong. You're just getting the pattern wrong for how you should be adding.
Okay.
Add the pops.
Yeah, it popped up to that level where I have the white line at, and I was watching it there, and it popped down again. Then it popped up again, and it was kind of a double top in that area when I was looking at the lower time frame. So I had for this trade, I had both the 1 minute and the 5 minute chart up. So I was glancing at both of them at the same time. When that second top happened right there, I decided to get back in tier 3 with a stop above that high wick. And then the trade started working in my favor again, which was great. Something that I know I need to work on also is when to cover. I think I did a decent job in this, but definitely. Oh, I'm sorry. No, I didn't. So number 7, I added tier 4 right at 303. Again, I was not really looking at the level 2. I wasn't looking at really what the price was. I was too focused on the bars of the chart. But I did realize right when I put that trade on that it was right by 3. And I just didn't feel comfortable right there, so I immediately took that trade off. So right after that, I'm still tier 3.
That's terrific. I like the idea that you got into a trade, you didn't feel comfortable with it, and you took it off right away. That's important. I do that all the time. We do that all the time. It just doesn't feel right. Better to take it off, have a clean, I say you are saving and protecting your intellectual, financial, and psychological capital and tapping into your intuition. Take it off, get a little better look. If it starts to look better, you can always put it back on.
So number 8, so after I took that trade off, I saw it go back down and then come back up to 3, and I just wasn't convinced looking at the pattern that it was actually going to break. I was looking at the level 2 a little bit, but I just wasn't convinced, so I decided to put tier 4 on with a very tight stop right above the entry, just to see if it was actually not going to hold that level. It ended up not holding, which was good, and it started moving all the way down to S2 from pre-market, which was at 277. So I had a buy order of tier 5 right below that, and I think I was probably the only order that got filled on that. And it didn't end up breaking down, and that was about the time that I needed to leave for work, so I put the full stop position at 290 right there. Which, looking at the charts after the fact, that probably wasn't the best place to put it. I realize that now, but looking at the chart later in the day, that was a decent exit, at least for me. So one thing that I do notice though is, I'm adding, but I'm not taking off, and that is a big problem that I know I do have, and I'm trying to work on my reasons to cover, and not just trying to add, and then cover everything all at once.
Any thoughts overall, Leon, on your takeaway of this trade?
For me personally, I thought I did a lot better than I usually do. I think I was using some of the lessons and the goals that I've been trying to work on. I think it definitely worked in my favor. I think it was also kind of lucky too that it worked out as well as it did. But I personally, I think I did a good job of managing it. But I do know I still have a lot of work to do in some other areas that would have made this trade better and a lot more cleaner.
Yeah. So you picked a really good stock selection. You had a bunch of pretty good trades in it overall, which is great. You had the experience of being in it and winning, which is great for you as a trader. What you want to be doing in trades like this, particularly ones that are so clean, is go back and think about where specifically, and this is the key, where specifically you could have been bigger within your system, and that allowing you to make more. This is a really good opportunity. It really fits what you're trying to do as a trader, but you got to go back and think about where you could have added, where you could have put on more risk, how you could have traded it better, and prepare yourself to do that next time. We actually had an experienced trader ask for more risk recently, and the trader got more risk, but the trader was adamant that he would make a lot more money if he just had more risk. He needed more downside risk. Doesn't matter what the reasons were. He got it, and he had performed to deserve it. But I said to him that here's your extra risk, but the real way that you're going to make more money is for you to understand what you trade well, for you to understand better what you trade well, for you to trade what you trade well better, for you to trade what you trade better bigger, for you to understand when you trade well better. That's how you make more money. And lots of people think it's just put on more risk. So you want to go back and think about how you can trade this better, how you can trade it bigger, why this setup works for you, and what you did to get yourself into a trade like this and to trade it pretty well, understanding yourself and what gets you to perform at your best. And that gets into sleep and exercise and all the stuff that you bring to marketplace. There's two sources of edge: the actual trade setups that you make, and then yourself and how you manage yourself. But I thought this was really strong, and it's a great experience. You're in a situation after this trade that you want to be in. This is a terrific, fertile source of growth, which is you picked the stock, you traded the stock, you made money in the stock, you reviewed the stock. Yeah, you can do better, but way better to be in that position than, shucks, I missed the stock. I didn't even, at the end of the day, shucks, I didn't even see the stock, and wow, look how much it traded down. Shucks, I was in it, but I got out of it, too quickly. Shucks, I was scared to put it on. I saw it. You're in it. You felt what it was like. You experienced it. From that experience, you really can grow as a trader if you do the work next to think about how you could have done it better.
Yeah, absolutely. And, making the playbooks, it's like you say, working out, it's more reps. And I have definitely seen that happen, not just trading the trade, but doing the playbook, looking at it, really thinking about it has enabled me to learn a lot more, a lot quicker than I would have if I wasn't doing that. One thing that I do after I make the playbook trade, and I do this, I can't make a playbook trade every day. It's just I don't have enough time with working full time and other things going on. I would love to. But one thing that I do is I go and I will look at a stock that I have traded, and I will then draw the lines where it would have been, quote unquote, a perfect trade. And I screenshot that and I put that in a folder. And then I just look at those screenshots to just kind of train my mind for these types of trades. And I have them organized. And then that's been helping out also. So it's not just what I did, but what would I have done better in a very compact form.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comment section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.